Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today I'm going to be talking about one of those beliefs that people have about commercial property that when they actually get into it realize probably is a myth, and it's having enough time to invest in commercial property. And I think if you're not involved in commercial real estate, there can be quite an illusion of that it's for sophisticated investors, that it takes a lot of time. It's like a whole new world. And, anything that you invest in, if you were to go off and invest in the stock market or in the bond market or in Forex trading or crypto, whatever, any kind of new investment strategy you need to understand it, because if you go half-cocked, if you go half-hearted into something, and I think we can all probably attest that we've all done this at some point, then you're basically not setting yourself up for success. And actually, worse, you could actually be setting yourself up for failure. And so I think there's a bit of an illusion about the fact that you need, it's very, very complicated in commercial, that it's very time consuming. And of course, as I say, every time you learn a new strategy, you do need to get the knowledge. Like there's no short circuiting this. Even if you have a source that's sourcing deals for you or are working with a mentor, like how do you do the checks and balances on whether what they're telling you is correct, whether the deal is a good one? And obviously that's what I work with my clients on all the time, is making sure that they understand what makes a good deal. And there's certain types of property at the moment that are actually incredibly, what's the right word, I suppose, kind of in terms of that they just hit the mark in terms of the ability to get finance, motivated vendors, asking price, or rather the asking prices is probably still high, but the actual price agreed makes the deal sing. And that there's tricks and tips that you need to know. You need to understand this stuff. But you also need to allocate enough time to be able to understand the world of commercial and do what's necessary to get the deals. But there is a big illusion that commercial is more difficult than residential. And I think that when we go into property investing, residential is what a lot of people know. We live in houses. We've probably lived in various houses. We've been to friends' houses. We understand it. We understand that, if you replace a kitchen or a bathroom, make the decor look nicer, bring some nice furniture in, maybe do an extension, then you're going to increase the value. It feels straightforward. But with commercial, there are lots of different strategies you can use, and it's just a case of getting to know them. But I think there is an illusion with residential, because you can understand something really well, but if you are managing residential, so it's all very well kind of understanding something intuitively, but if you're having to go off and manage it into the medium long term, then residential is incredibly time consuming. Obviously, different types of residential are more time consuming. If you've got hands-off buy-to-let, single tenant, that can be a lot less time consuming, although it does depend on the tenant, it does depend on the house. But obviously, if you've got things like HMOs, then they're incredibly noisy types of strategies. So yes, it might be more straightforward up front, but actually when you come to actually manage these properties, it's actually really noisy and really time consuming. And I think commercial, you need to flip that on the head. So With commercial, you have to understand the strategies, you have to understand the sector that you're investing in, you have to understand your niche, and we'll come back to that in a minute. But when you get a deal done, very often, because there's full repairing and insuring leases, longer term leases, good business tenants, very often you can then have a very untime consuming strategy, which means that really your tenant is your property manager. They're repairing the property for you. All you need to make sure of is that you're getting paid the rent on a regular basis. And so that upfront work is absolutely worth it to get that hands-off income. Now, I never say that anything is passive, because I just don't believe in passive income. Even with commercial, even if you've got the most kind of hands-off income, blue chip business tenant, full repairing, insuring lease, there are best practices you need to follow. So, for example, I would just go and meet with the tenant. If it's a smaller tenant, go meet them every so often, understand how their business is, build a relationship with the key personnel there, and so that you're not kind of catapulting in to say hello when you've got a rent review or a lease renewal, which is ultimately a confrontational relationship. You want to kind of build relationships. Equally, you want to check in on a tenant's covenant, look at their last accounts, make sure that they're still trading well, look for any early warning systems, Google them, So whilst it's hands-off, it's definitely not passive, but it can be significantly more hands-off than residential income can. And so when we're looking at commercial, it's just really important that, yes, you do understand the strategies. And I've worked with commercial sourcers, I've worked with business people before who are investing in commercial, and actually that knowledge isn't there. And, very often when I work with people, they're like, gosh, if I'd just known this before I bought my first deal, I would have had, be positioned in so much better way. So get that knowledge up front. It's super, super important. And it's really easy to obtain. You can work with somebody like me. You could Google it. You can ask ChatGPT. I've got different programs that you can work with me on. Come along to the big commercial update on the 20th of November 2025. And if you're listening to this after the big commercial update is finished, you can look at the recording. You can buy the recording, or I do regular, kind of every 3 or 4 months, I do a commercial conference. So look out for those coming, because you can get loads and loads of free information. I always follow up the big commercial updates as well with blueprint days, where I spend a whole day going through basically my board blueprint, obviously in very more light touch detail. And again, so it doesn't have to cost a fortune to get this knowledge. Listen to these podcasts. Obviously, there's a wealth of knowledge in these podcasts, both from me and from get my guests as well. So what you really need to understand from commercial is how it operates, how it works. So, for example, you need to find a niche, and you only can really have, if you have the knowledge of commercial, is when you can find your niche. So niching is so important in commercial, because there are so many different sectors. If you think about, a house is a house is a house, whereas with commercial, you've got retail, offices, industrial, hotels, leisure, you've got, guest houses, petrol filling stations, all kinds of types of property, even built to rent. And so you need to understand and have some really good knowledge on 1 to 3 probably niches. And the reason for that is because it just makes that knowledge acquisition easier, because once you understand how you can add value to commercial property, and obviously listen to episodes of this podcast to understand that more, then you really need to understand your particular investing location, the type of property that you're investing in. Because when you are going out to source deals, you need to make sure that you're buying in an area where there's good tenant demand, which means that tenants will be out there and they will pay a good rent. They will buy, they will take a long lease. You won't be looking to be hammered down like you would if there's too much supply. You want to make sure that you can get finance for your type of strategy. You want to make sure that there's a good medium to longer term picture in your investing location, where potentially you're going to get capital growth. It depends on obviously on your investing criteria, but where you're going to get capital growth over the longer term. So it's really important to do this work up front. And, I call it kind of slowing down to speed up. quite a well-worn phrase, but it's very, very true. What we do on the board is, with my board members, is we start with the end in mind, work out where everybody wants to get to. And of course, everybody's different. And then we pause and we spend some time to find a niche. Yes, it's really tempting to go out there and rush and get all these deals, but it's not a numbers game. It's basically making sure that you do the right deals in the right location. And if you need to get money out, you're doing kind of money out deals, which are entirely possible in commercial. You just need to know what to buy and where to find them. So get the overall knowledge first, and then find your specialist knowledge, and then obviously build relationships in your investing niche, with local agents, with key businesses, local stakeholders, really important. Obviously, you'll build relationships with valuers as you buy properties, etc. So you'll really get to understand that investing location. So coming back to time, that's where we have a time-saving mechanism, basically, because you are pausing, you are getting the knowledge. That is time consuming. Like, I can't hide that isn't time consuming. But once you've got that knowledge, once you've built your relationships, once you've found your niche, then you are saving yourself so much time, because you are concentrating on a handful of locations, stroke strategies, and you're not being scattergun. I've seen people who, before they've worked for me, are literally investing all over the country, which is absolutely fine, but there's no rhyme or reason behind it. There's no logic behind it. And actually, you want to be really laser focused, really understand your investing locations, so that you can not make, expensive mistakes, and also that you can save yourself time. I also work with people who are very, very time poor. So they may be business owners who want to invest in commercial with their profits. There might be business owners who want to exit their business through their commercial property, growing their commercial property portfolio. I work with people who manage other bigger, residential or mixed investment portfolios. I work with a lot of people that have a day job and want to use property to basically escape the day job or supplement their income. And the trick with time in commercial is making sure that you are super organized. The very first thing that I give to there's two kind of gifts I give to my new board members on month one. Number one is a journal, because I believe that really helps you formulate your strategy if you do some journaling. And number two is a book called Atomic Habits by James Clear. And it's not rocket science. Once you've got the knowledge, it's not rocket science. But what you do need to do is form your habit muscles in terms of blocking out time in the week to find properties, blocking out time to speak to key stakeholders like local agents. And if you've blocked that time out, then not kind of letting yourself down by getting distracted on doing something else, because sourcing commercial and working on a strategy which ultimately is going to help you escape from a day job or diversify your income, it is one of those things that is important but not urgent. So your day job will be screaming, your investment portfolio will be screaming, your business will be screaming, but actually it's one of those important but not urgent things. So it needs to be prioritized. Yes, it's not screaming at you right now, but when you're having to work till, well into your 70s because you haven't built up a portfolio, or, you've not got a diversified income and something happens, then you'll absolutely be ruining the day when you didn't stick to these habits of sourcing property.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So when I work with my board clients, I spend time with them, giving them sourcing systems, giving them a blueprint as to how they can block out time in their week. But ultimately, it's down to you. It's down to the individual as to what priority that is in your life and in your systems, because ultimately it's only down to you as to how much time you block out. So if you're able to, if you've got a 5 days a week day job, then maybe it's evenings, maybe it's an hour or two in the week that you can spare. That is much better than nothing. If you think about 2 hours a week, that's between 8 and 9 hours a month. That's a day a month that you're spending on your side hustle or your commercial property journey. And, you can make some significant progress in that. You can make multiple phone calls to agents. You can look on the portals and source properties. You can set your systems up. You can go and do viewings. You can stack numbers. You can speak to a broker. All of that is possible in a day a week. So I guess it's all down to the level of motivation and how many habits are being formed to get that time. But it is absolutely worth it in commercial, because once you have got over that hump, you understand how you add value and how to find the right kind of properties. You then have found a niche and you've built relationships in that niche. Then just life becomes so much easier, because you're saving yourself time ultimately, because you've got your alerts set up on all the main portals like LoopNet, Property Link, Estates Gazette, Rightmove, Zoopla Commercial, local agents. You're phoning local agents regularly. And if you're doing things properly, local agents should be, if you're building relationships properly, local agents will be sending you property alerts off market. A lot of property deals get done off market in the commercial world. So, and it just becomes a snowball effect. And then obviously, ultimately, when you've bought a property through an agent, they know that you follow through, and you will be on their chosen list. You will be in their little black book. So it's like one of those, it's like I think I've described it on this podcast before. It's like a hamster wheel. So when the hamster first gets in the wheel, there's no motion. It's quite difficult to get that wheel turned. It goes very, very slowly. But as you speed up, as you kind of get used to things, as the hamster kind of starts running, that wheel speeds up and speeds up and speeds up until sometimes you can't even see the hamster in it because they're going so fast. And that analogy works really well for your commercial property journey. And obviously, at different times of your journey, you're going to be concentrating on different things. So when you first start, you'll be concentrating on getting the knowledge, working with maybe a mentor, and also doing sourcing, building relationships in your chosen niche. Then once you're finding deals, you'll be still spending time on sourcing, but you'll be looking at stacking deals. You'll be looking at getting finance. You'll be looking at making sure that you're doing your asset management when you've bought deals. And then obviously, ultimately further down the road, you'll be looking at portfolio management. You'll be assessing your portfolio. Should I keep properties? Should I sell them? Should I asset manage them? Have I got my alert set up for rent reviews and lease renewals? Is all the statutory paperwork in place, etc.? But one thing that's always constant, unless you've decided that you've kind of got enough property, is that you need to keep sourcing. And that is definitely a hamster wheel. You just need to keep kind of getting that hamster wheel going. I work also with a lot of business owners who are kind of thinking, oh, yes, I'd like to invest in commercial, but I'm just going to leave it to the side because at the moment I'm too busy firefighting in my business or in my day job. And I've got something really exciting coming up that caters for that audience. So watch this space. It won't be for another few months. But if you're a business owner and you're feeling like you would like to, if you would like to invest in commercial, but perhaps don't have the time, then watch this space. So commercial property, it's not rocket science. It's a lot easier ultimately in the long term than residential, but you need to put the work in up front, as you need to do with any other type of investing as well. But it will pay dividends, and you will reap the rewards ultimately. And ultimately, if you can build a commercial property portfolio, you're actually going to be saving time rather than kind of having to work out how you're going to juggle your diary, because it'll release you from other liabilities, day jobs, etc. And ultimately, it is probably one of the most ultimate sources of hands-off income through full repairing, insuring leases, business tenants, and longer-term leases. So don't be put off thinking you haven't got time in commercial, because you very definitely have. So make sure that you block time out in your diary regularly to do commercial. As I say, even if it's half an hour at a time, just get it done. Work out a list of priorities up front as to what you're going to do. That might be setting up alerts on some of the portals. It might be speaking to agents. It might be driving around your chosen investing locations. Whatever it is, it's just down to getting those habits sorted so that you can get this stuff done. Thanks for joining me, and I look forward to seeing you next time on the Commercial Property Podcast.